So thank you for coming. Today's session is on a topic called options expiration cycles. And it's important that we know about the option expiration cycle. It's a little technical. Technical means there is a concept. So if you have a hard time in understanding, then you can go to YouTube channel, The Real Trade Genie, and listen to the recording. It will be posted tomorrow morning. And we do send out the recording link by email, so you don't have to ask. So we do that. So let's begin. So these are the subtopics we will cover in 1 hour or so. So what is option expiration? What is option expiration cycle? So there are cycles. I will explain to you 3 cycles. Why we need to know about option expiration cycles. So whenever we are learning something, we need to ask why we are learning this. Like my daughter asked me, Daddy, why you want me to learn this, or why we are going there? So why we are going there to learn option expiration cycle? So we need to know 3 types of options. We need to know 3 types of option cycles. And then on top of that, on top of 3 option cycles, there is something called modified option expiry cycle. So we need to know what is modified option expiry cycle. Uh, just when we know this, then we know what is coming. So what is coming if we know the concept of modified option expiry cycle? Then I will give you the examples of option expiration cycle. So I try to give you the example. If I teach you without example, is not good. So I try to, this is teaching. So I'm giving you some examples. And then the example have, so one example needs to be straightforward. Then the exception comes. So if then else, if this happened, then this happened. So it's a straight from A to Z, and then you jump the ship from B, then you went to D, then from D to F. So all that kind of try to explain. So examples of option expiration cycle, I give you some examples. What happens after expiration date? So let's say we are in the month of August. So if we are trading off August expiry, then what do we expect after the August expiration month or August options expire? So that kind of thing. And then at the end, understanding option cycles for leaves. So leaves are longer term dated options. So they are unique, and I will explain to you how the leaves months get added. It's not like okay, listen to Nashi and just go on Facebook and do some Facebooking, so you will miss out. So pay attention. Otherwise, you can always go and listen to the recording. So what is option expiration? So we all know options have expiry date, right? So we know option expires. All options come with expiry. In fact, there is a book called The Half-Life of Facts by Samuel Herbesman. So all facts have expiry date. So what is fact today have expiry date. They are no longer facts, or they were made up. So if the facts which we believe today are facts and we believe to be true and they were made up and they have expiry date, so you can read that book on that topic. So options also have expiry date. So that's why it's like renting something. So we are renting by trading options. And that expiration date, once it's determined by the market maker or whoever is setting up the expiry date, expiration date is fixed. So it doesn't change. So we all know the option have expiry date and expiration date is fixed. We cannot change it. So if we cannot change it, then what options we have once the option we are trading, whether we are buying or selling, is expiring? So what we can do and why we need to do. So why we need to know option expiration cycles? Because trading anything, stocks or options, futures, require a strategy. So if you don't know your strategy, uh, and if you don't know option expiration cycle, then you cannot implement the trading strategy effectively. So we need to implement the strategy effectively, and so stocks, we are trading market, then trading a stock, then on top of that we are going another level, third level of option. So there's market, we are trading the markets, and then out of that market we are trading a certain sector. Out of that sector we are trading that some certain industry group. From industry group we are trading the stock, We are selecting a stock. We're trading, let's say, Baba, not Baidu. I don't know, maybe Baba is the one moving, Baidu not. And then we decide to trade options. So we are going one level deep. So to trade all this, we need a strategy. So knowing so if when we are trading options, we need to know the expiration cycle. And another reason, not only to implement the strategy, but the trades need adjustments. So they need adjustments. So we need to effectively implement the adjustments in the trade, depending on what it's doing. What we intend when we put on the trade, we expected it to go up. Now it's going down, and or it's resting, it's taking time. So some kind of adjustment is needed, whether average down, average up, or sell call or sell puts, this, that, sell the current one, buy the long month. So all that kind of thing. So adjustments needed. So we need to know the option expiration cycle so we can implement the adjustment. If we the more knowledge we have, the more options we have. So we need to have multiple options. If you don't have multiple options, op multiple options meaning multiple path. If you don't have a multiple path to get to the point where we are going, then we don't end up where we are going. So increase the probability of success. So you're increasing the probability of success by knowing the option expiration cycle. So you're not operating in the dark, and there are no unwanted surprises. So you're getting prepared. So education is knowledge, and you're getting prepared. Trading itself is very deceiving. Thousands of variables uh, being thrown at us on any given moment. So at least we are prepared from this point of view. So there are three types of options. One is called weekly option, another one is a monthly option, and then there is a third called quarterly option, and then there is a fourth kind which is called leap. So I'll explain leap later. So three types of options: weekly options, monthly options, and quarterly options. So I'll explain to you one by one. So this is a 1 hour coaching session. So in 1 hour, you come here to uh, get the gist of, and then you go and do your deep dive. So you can deep dive in each topic. So if I were you, I say, oh, okay, I did not know weekly or monthly or quarterly. So you find the resource where you can learn, whether it's Google, YouTube, you attend a course, buy a book, and deep dive into each part. So I'll explain to you in brief. So weekly option, monthly option, quarterly options. So what is weekly option expiry cycle? So weekly options are for a few selected stocks. They're the one which move big. So they have a weekly option. So they are listed on Thursday and they expire next Friday. So only if you count the days, trading days, so 7 days, right? So listed on Thursday and expired next Friday. So they're only trading for 5 + 2, 7 days. The Saturday, Sunday is off, and sometimes there's a long weekend, so that day is off too. So you have very short window to capitalize on the moves. So traders do make money by buying weekly options, but most of the traders, they run out of the luck. They run out of luck. They destroy their portfolio. I have seen many. Um, Instead of so I give you example. If I send an alert to buy right now, let's say I send you alert to buy October calls, and that person goes and buy the weekly option expiring like after 3 days. So he's putting a different strategy. So 3 days later, his option expired, whereas I have time on hand and I make money. So weekly options are meant for quick gains. So you need a quick move in your favor. So quick move on your favor, you're trying to capitalize on short-term market moves, and you're trading weekly options, because every day, if you buy an option for 70 cents, so just to be in a simple straightforward math, if you buy option for 70 cents and every day the option is expiring, let's say equal amount. So 10 cents expiring every day. So tomorrow, if you trade, it will be 60 cents, then 50 cents, then 40, 30, 20, 10, 0. But um, it expires faster. As the time comes closer, it's going down faster. So a little bit move stocks goes against you, you will see 70 cents is trading at 5 cents and then 0, or 70 cents can be trading at $5, $7, $10. So it's very speculative, highly. Option trading is a speculative itself. So option trading is very speculative game. And on top of that, when you're trading weekly option, you are upping the notch, whatever you're going, you're like on a scale of 10, you're just, okay, give me 10. So it's like that. So you better be right. So weekly options, good if you are expecting earning announcement, like you're expecting Apple to tank. You buy puts just before the option, before the market close, and you buy the puts, and then Apple tank. Here you go. Your options will be, 70 cent option could be trading at $5 or $10, or it can go to 0 right away. If it doesn't move or go the other way, then you don't have time to recover because a higher level of theta decay. So weekly options are good for short term. So you have to have a proper timing and capitalizing on an earnings and other events. And maybe you're expecting the news will come and it will affect the market. So you are trying to hedge your portfolio. So you're paying short term for some 5-6 days. If you're buying on Monday, the option is expiring on Friday. There is a strategy which you can use. You can paper trade. This is strategy. So you can paper trade. This is strategy, which is find the stocks which are which move. Um, and they have weekly. So weekly options, they move, they are moving. So Apple, Baba, Baidu, these kind of a stock, Google, Amazon. So find the stocks which are moving, create a basket of your portfolio. So choose 5, 6, 7 of them, allocate a certain capital to this portfolio. Let's say you allocate $2,000 to the portfolio, and then you say, okay, on Thursday or Friday or on Monday, or on Friday or Monday, I'm going to buy, I'm going to allocate $2,000 equally to all these 6, 7 um, stocks, weekly options. So you're buying, you can read the charts also and then decide, okay, this one is really going down. I don't need to buy calls. So all of them are calls, not puts, or all of them are puts, not calls. So you create a basket of these weekly options. And then when the move comes, you sell the basket. So $2,000, if whatever is your target, 3,000, 4,000. However, I don't do that, but I'm just, however, the $2,000 can go to 0. All of them can go against you, or one goes so much in your favor that the other 4 loss is nothing compared to the one winner. So that's one strategy. Weekly options again is to hedge your short term, hedge your portfolio short term, or you capitalizing on a short term market move such as earning, FOMC, etc. So that's weekly option. So advantages of weekly option is flexibility and granularity in managing trading decisions. So um, if you have let's say if you have a long position, and on temporary basis, the stock, let's say you're holding the shares and you see the stock going down, so you can take advantage of, you can recover some by, if you know it really is tanking, you buy the puts. So you can, on the other hand, one hand you're holding the stocks, and on the other hand you're buying the puts on, and cover some of your cost basis. You can hold, you may be holding October calls, but right now it's going down, and you don't want to, instead of selling the October calls or closing it out, you're buying the weekly puts on that. So you can do all these kind of things. So and then another advantage is the significant market events such as FOMC news or events, etc. So that's the advantage of weekly option expiry cycle. The Disadvantage is a lower liquidity. So is sword is also hanging, lower liquidity, and affecting the uh, y- if the volatility was high when you bought it, and then even though the stock is going in your favor, you don't see any move in the option. You don't see any move. In fact, you are losing money. So all this kind of tricks are happening in the weekly option expiry cycle. So the sword is, and on top of that, the sword is hanging. So imagine you're holding calls, weekly calls, and Monday, um, today is Monday, and let's say nothing happened, then you say, okay, I give it 4 days and your value has gone down even though the stock is flat. So you say, okay, I have 4 days left. So 4 days of sword hanging, and then on Tuesday the stock goes up, and you come to the let's say below a little bit of break even, below the break even, then you have 3 days left. So you console yourself, okay, I got 3 days, maybe it will go up in next 3 days and I will make money. So the stock can do all this, and eventually the Friday comes and then it expires. So I don't do this kind of trading. So I don't want a sword hanging on my neck. So there's another option called monthly option expiry cycle. So this is the most common. This is what I trade and I send the alert. The monthly options expire during the last trading day of third week. So last trading day of third week. So usually the last trading day of third week is Friday. So by default, we say it's Friday expiry. But if Friday is a holiday, then the option is expiring on Thursday. So that's the last trading day, Thursday. So there's no, you cannot trade because the Friday is some holiday. So last trading day of the week, legally option expires on Saturday, but you can trade only on till Friday. And if Friday is closed, or something unexpected happened and the market is closed on Friday, then the last trading day was Thursday. So most common and widely used maximum lifespan of 1 month. So monthly option have a maximum lifespan of 1 month. However, so for that month. However, I will show you next. Right now, you can buy, even though it's a month of August, you can buy October, maybe you can buy December. So how these months are listed, they have a logic, how they get listed. So some options you will see, some have September and then they don't have October, then they have November or December, or some have October. Then, September is listed right now. I'll explain to you why September is listed. So some options you will see there's no October in the option chain. It's November or December. So why the month of October not listed, and why we see August and September right now. So legally option expire on Saturday. So what is the advantages of monthly option expiry cycle? Flexibility to adjust the position. So you have quite choices. So when you open your option chain, you will see right now the month of August listed. So options August is expiring on in the next week. So month of August is listed, and you will see month of September listed. And for some, you will see either October or November or December. So August is listed there. It's the current month, so it's called current month. So we are in the current month of August, and then there is something called subsequent month. So subsequent month of August is September. So September is listed there. So when we have options, subsequent months listed there, when we have multiple months listed, then we have the flexibility to adjust the position. So um, you can buy October calls. You think September is not enough time. You may have few positions open in September. So now you say, okay, I'm going to buy in October because I don't want to stack all my position in the 1 month. So anything can go wrong, and then you have all expiry in the month of September. So as the time days to expiry is approaching, your criteria, you start to shift your trades to the next month. So flexibility to adjust position, flexibility to initiate new position. So If you have 5 positions already open in the month of September, then you say, okay, whenever I open a new position, I will not open in September. I will open either in October, November, or December. I'll choose one of the month. So when you open the option chain, you say, oh, October is listed, or November is listed, or December is listed. So you can choose uh, different month. So ample liquidity, because this is the most common, so there's a lot of liquidity there, and easier to enter and exit positions, provided your trade, you're looking at something where ridiculous spread is there. I don't know why they even list it. There's no point. Bid is 2 and ask is $4 in one contract. So you buy at 4 and then you sell at 2 if you don't pay attention. So pay attention. Option for even for monthly, there are some ridiculous options listed there. Disadvantage is short lifespan, increasing the impact of time decay. So it has a more lifespan compared to weekly. I don't know what is ODT is, and audio is working. So audio is working on my side. So please check your computer. So short span is still compared to weekly. It has a short span because of monthly cycle. So increasing the impact of time decay. So option as approaches the expiry, the time decay kicks in, and you start losing money. Even though the stock is moving in your favor, the option is not moving. Frequent expiration, higher frequency of decision making. So in monthly option, you compare to weekly, still you have a higher frequency of decision making. And I will explain to you about the quarterly, so you will know the quarterly you have less decision to make. So once you buy it, you're holding it for a quarter. For the monthly options, if you're buying October or November right now, so is not much decision to make if the stock is doing its thing. But if you're buying September, then you have to be uh, vigilant in your trading. What is uh, going, or August, especially August. So frequency of decision goes up in monthly option, and think about the decision making in the weekly option is too much pressure trading weekly option. Now the third kind of option expiry is the quarterly option. So in the quarterly option, the last trading day is of every quarter. So last trading day of every quarter. So when you see quarterly option, they are expiring on the last trading day of every quarter. So whatever it is, the last trading day of the quarter. So I don't trade quarterly options. I only trade monthly options. So last trading day of every quarter, and the quarter is March, June, September, and December. So there are some stocks which have a quarterly options. I focus on the monthly options. So quarterly options. So longer time frame, so 3 months, more open interest and less volatile. They are less volatile. In options, you need to trade options where the public is trading. So they are either the speculator, they are making a lot of money or losing a lot of money. So most of the time, the people trading weekly options, they are losing money. There some I'm sure some are making killing because all this zero sum games. People are bringing the money, giving it to the professional, bringing the money, giving it to the professional. So they are killing it in weekly time frame. So quarterly, longer time frame, more open interest and less volatile. So we need to trade option which is in the stock which move. So there are about 250 stocks which I find myself. I prepare the basket I have, which they move. So there is no. I don't need to go and trade Verizon or AT&T kind of thing where the it moves like 20 cents. So you cannot make money. And then there is some news. So the stock which is volatile, they're moving, a lot of action in it, and the options are normal. So those are monthly options, not quarterly. So for this reason, I don't trade less volatile, unless I'm I have a strategy where, I don't know, maybe I have a strategy where I need less volatility. So disadvantages of quarterly option expiry cycle: reduce liquidity compared to monthly options, and less frequent adjustments to positions. So less frequent adjustments. I don't know if this is a disadvantage. So reduce liquidity. So I don't trade quarterly option cycle. So I trade those which are everybody is trading. So the crowd is there. So there is a wisdom of crowd. I don't want to be the lone guy. Yeah, hello, look at me. I'm here. So I don't want to be like that. Now we need to talk about the option cycles. So expiration dates that apply to, what is option cycle? So option cycle is the expiration dates that apply to different series of options. So there are series of options, cycle, January cycle, February cycle, March cycle. So I'll explain to you what is January cycle, February cycle, and March cycle. And these apply, option cycles apply to stock and index option. So apply to index, stock and index option is a series of options. So have a cycle, January, February, and March cycle. So by understanding these three cycles, January, February, and March cycle, and when you open the chain and you're trying to trade, looking at evaluating an option and understanding behind the scene that, okay, there is a January cycle, there is a February cycle, and there is a March cycle, then you would know what is coming next. So you can trade accordingly. And or maybe you wait uh, for the trade. So things like that. So each option, if you open your chain on any stock, you will see it has 4 expiration months. So each option have 4 expiration months listed at least. One is called the current month, second is called subsequent month, and then they add 2 extra months. So there are 4. So if the current month is August, the subsequent month is September, and then there will be 2 extra months attached to that option chain. So option always have a current month, which is August, and then the subsequent month, which is September. And then there are 2 months attached to the option. So these 2 extra months are assigned based on the cycle which to which this stock is attached to it or assigned to it. So for example, if let's say Apple, so I'm just giving you one example, I don't know for real what is there out there in the trade. You can look at it if you have your trading platform open. So let's look at the Apple. So Apple, you will see August option is listed, and then you will see September option listed. And then you will see, maybe you say, okay, after September, I see October and I see January. So something like that. So you say, okay, I see October and then I see January listed. So there's no November listed, no December listed. So what is going on? No option for November and December. Whereas if you look at the BABA, then you say, okay, current month is August, it's listed there, and subsequent month listed is September, and then there are 2 months. So 2 months you see, maybe you see November and you see February listed. So then you, if you look at this way, then you say, okay, what happened to the January and October or December months? So why certain months are missing? So, but so when you know that these months are missing and these are the months assigned, if you understand the January, February, and March cycle, you will know that which month will be added to this option chain for BABA or for Apple and when. So you can prepare yourself and you can trade accordingly. You can make adjustments, especially when the expiry week is running. Right. So this week is the expiry week. So when the expiry week is coming, and if you know the option expiration cycle, then you know which month will be added to whatever stock you are, you're looking at, Apple, Baba, Baidu, etc. So 2 extra months. So how these 2 extra months are assigned to any option, because there are 12 months in a year. So they have a formula. So they assign the extra month based on the formula. So it's like there's a, you know, um, like you buying a ticket in the railway station or somewhere, airline, you're checking in. and then you go, okay, this one, you go on this line, and then this one, the lady tells you, okay, you can go to this counter for your boarding ticket, or you go to this counter and you go to this counter. So this is exactly like that. When the stock start to trade and when the options start to trade, the experts or the authorities, they assign the cycle to that particular stock on a random basis. And based on assigning the cycle, out of the 12 months, the 2 extra months are assigned. So there are 12 months in a year. So which 2 extra months? So these 2 extra months come based on the cycle. So there are three option expiration cycles. One is called January cycle, another one is a February cycle, and the third one is a March cycle. So January, February, March cycle. So Apple may be assigned to January cycle, Baba may be assigned to February cycle, and a Home Depot may be assigned to March cycle. So January cycle, February cycle, March cycle, they just assign it randomly, or maybe they have a secret formula to assign based on the alphabets or whatever it is, or the in different. I don't know, but I know that they assign it and they get assigned randomly. Maybe they have a systematic way of assigning. So whatever it is, they get assigned to the cycle, one of these three cycles. So based on assigning these cycles, the stock option get 2 extra months. So I will explain to you what 2 extra months. So cycle is assigned randomly. Now, let's say I'm explaining you the January expiration cycle. So then I will explain to you February, and then I'll explain to you March. So January cycle. So January is the first month of the year. So they just think like this. Ev for the quarter, the first month of the quarter is assigned. So January is the first month of the year, and then April is the first month of second quarter, and July is the first month of third quarter, and October is the first month of fourth quarter. So this is stock, let's say Apple, if it is assigned to January cycle, then these months will be automatically assigned to them, to Apple. And on top of that, so let's go back. So where? So current month is August, so every stock will have the current month, and subsequent month is September, so every stock will have that option subsequent month of September. So 2 extra months. If it is assigned on a January cycle, then the 2 extra month you will see right now, because the subsequent month is September. So if it is assigned to January cycle, you will see the month of October is assigned, is open for trading. So you will see a stock having August option, September options, and October options. And because we need two months, so after October comes January. So you will see the order of listing you will see is August, September, October, and January. So you will not see November and December listed. Even though you try to buy right now, November and December is not there. It will come later. As the time goes by, I will explain to you. So if Apple is assigned to January cycle, and right now is August, so we see August there. We see subsequent month of September there. And because it's assigned to January cycle, so we will see October, and then we will see January. So now, let's say uh, September expires. So September comes and expires. No, August expires. So let's say August expires next week. So knowing that August expiry is coming on Friday, and the option August, we will not see August at all. We seeing September, and we seeing October, and we seeing January, and we seeing September, we seeing October, and we seeing January. When the August expires, then we will see month of April is added, because then the September will become the current month, October will become the subsequent month, and then the 2 months for the January cycle will be January and April. So this is the way another month gets added. So you will see April option start to trade in the Apple. So if you have a strategy for Apple, and you say no, October is not good time, not enough time for me, and January is not enough time for me. I need something to go as far as April. So you know that August expiry happens on Friday. The next Monday, you will see April listed for April. April is listed, not the Apple listed for April. April is listed for Apple. So April month will be listed for Apple next Monday, because the August expires. You have September, which will become a current month. So September month will become a current month for all options. And then all of them will have October listed as a subsequent month. So even though you're seeing a lot of options don't have any October listed, you will start seeing it October change. So if we are trading from, let's say we are trading right now and we say, no, August is too tight, not time left. So August, I'm not buying any August. And then September, I don't want to buy September also. And there's no October listed, and you think November or December or January is too far. So if you wait and Monday, then you will start seeing October being listed. So October will be listed there. So just like January cycle to January cycle, there is a February cycle. So February is the second month of the year. So February is second month of the year. So we assign second month of each quarter to this cycle. So second month of second quarter is May, the second month of third quarter is August, and second month of fourth quarter is November. So these 4 months are automatically assigned when the time comes as 2 extra months, depending where we are in the cycle in the month. So right now we are month of August. So August is the current month. September is the subsequent month. So these two are assigned. Now, if let's say this is Baba and Baba is assigned to the February cycle, so you will see November options listed there. So not only you seeing August, you seeing September, and then you're seeing November. So August is the current month, September is the second subsequent month, October will not be listed, the November will be listed there, and February will be listed. So November and February will be listed for that stock, let's say Baba. When the August expires, then the current month will become September. So September will be added. No, September already there. So September is there. So September becomes the current month. Then you will start seeing October listed there. So October will be added because we need one subsequent month, not only the current month, but we need the subsequent month. So when the August expires, the September becomes the current month, and we don't have October listed right now. So as soon as August expiry, you will see October listed. So if you have a stock which you want to go long, let's say, so you say, no, I don't want to buy August, and you see November listed. So if your strategy require that you can wait, you're stalking that trade. So you know that after August expiry, October will start trading. So just need to wait 1 week. So knowing that October will be added soon in a week or 2 days later, or if it's Friday, then on Monday you will see October. So you would wait for October to arrive, and then you may buy October instead of November. So that is February cycle. Now, same way, the March cycle. So March is the third month of the year. So June is the third month of the second quarter, September is the third month of third quarter, and December is the third month of the fourth quarter. So similarly, let's say let's say Home Depot. So Home Depot right now, so if we apply the current month and subsequent month, etc., so we will see Home Depot is trading, has option for August, and a subsequent month is September. So we will see August and September for Home Depot, and the 2 subsequent months we will be seeing December and March. So 2 subsequent months we will see December and March. When August expires, then September becomes the current month, and then the October will be added. So all those, so October will be added next week in all the option where you don't see October. So October, you're seeing it based on the cycle, not based on the subsequent month. Subsequent month will come when August expires, because then we have September and October. So a lot of options where we don't see October, we will see the October month next week. So, so this is the March expiry. So January cycle, February cycle, March cycle. Now there is a um, they call it a modified options expiry cycle. Um, Previously, when the options started trading, they only had current month, and then they had these extra months. So they had current month and they had extra months, 2 extra months. But then they said no, from current month, let's say if it's August, we are jumping into October or November or December, we need a smooth transition. So they said subsequent month will be also added automatically. So there's 2 months. So subsequent current month and subsequent month concept come through something they implemented called modified option expiry cycle. So there is a subsequent month, and current month is always there. Because if imagine um, if you don't have a current month and a subsequent month, and options are assigned just based on these cycle, January, February, and March. So if the options are assigned based on January, February, and a March cycle, then we would have only depend which quarter. So if it's March quarter, then we would see only March, June, September, December. If it's a February cycle, then we will see February, May, August, and November. So we don't there's a big gap. So in order to eliminate this big gap, they implemented something called like a amendment, modified option expiry cycle. So they said no, all option will have a current month and subsequent month, and the reason for it is for speculation and hedging. So they want you to speculate. So traders speculate. So option trading is a speculation. So you have to be right on the timing. So speculation and hedging. So you can hedge your portfolio. For hedging, you don't need, when you're implementing hedging strategy, you just, you're expecting some kind of an event which will can happen against you. So your portfolio, so you're hedging only short term. You're not hedging by buying, okay, let's buy some puts on Apple for the March and see what happened. I expect Apple to fall by, in case if it falls by March. No, if you expecting Apple to fall, it falls right now, or the whole market is tanking, it's tanking next week or 2 week. You're expecting some kind of a happening, or some kind of a black swan event occurred, and then you wake up in the morning and you say, oh my God, all positions are down. I need to buy some puts. And then when you buy the put, then the stock just keeps market reverses. So hedging, we have to be very careful in hedging. Hedging is like insurance. You buy insurance, so you wish you don't buy insurance. We don't buy insurance on car, home, etc. Looks like wasted. So it's like that. Hedging, we have to be careful and don't do over hedging, because you will give up all your profit in hedging. Even though your portfolio makes money, but you bought the insurance and it's all given back in hedging. So so modified option is for speculation and hedging. Now, option expiration cycle example. Okay, here is the example. So I already explained to you example, but here is the example in written form. So option expiration cycle example 1. So let's see, let's think that today is January 1st. So think about it, that today is January 1st, and the stock have a January cycle assigned. So stock has been assigned a January cycle. So available months, we know 4 months, current month and subsequent month. So if today is January 1st, then we should see January as a current month listed. And because February is the subsequent month, so February will be listed there. So January is listed there because January is the current month, February is the subsequent month. because the cycle assigned is January, so we will see April and July listed there, because April is the first month of second quarter and July is the first month of third quarter. July, August, September. October is not listed. The reason October is not listed because the four options are listed. So January, February, April, and July. For if we are in the month of January and the option cycle assign is so happen that it's a month of January. So January cycle. Now, so what will happen? So ask yourself, what will happen if when the January option expires? So what will happen when the January option expires? Because it's assigned a January cycle, and we know we need to have 4 months, and we need to have a current month and subsequent month. So February will become the current month, and April and July will came from previous cycle, so they're still there. Month of March will be added. So if it's a January and it's expired, the February, which was a subsequent month, will become the current month, and then you will see the month of March added to the option chain. So you will say, oh, now I see April, so March. So knowing that the March will be added, if you are in the third week of January and waiting for the new position to open, or you need to create a vertical spread or sell some calls or puts, whatever your strategy is, then you know the March will be added soon, next week or 2 days later, or Monday. Today is Friday, Monday it will be added. So January option. So what happened when February option expires? So February was the here. February was the subsequent month. When January expired, it became the current month. So when the February is expired, then what will happen? The March month, which is a subsequent month, will become the current month. So March will become the current month, and then April is already there. So April is considered a subsequent month. July is already there, and then a new month will be added, which is October. So it depends which month, which cycle the stock is assigned, and which month is expiring. So depending on that, a new month will be added. So same stock, when the February option expires, then you will see October is added. March will become the current month, April will become the second month, subsequent month, and July and October. July is already there. A new month will be added, which is October. So that's the way options cycle affects. Now, something called long-term options. So long-term equity anticipation, I don't know why they have such a long name. Long-term equity anticipation, participation, security. So LEAPS, long-term equity anticipation, you're anticipating, anticipation, then you're participating, participation, and then security. So long-term equity anticipation, participation, security. So that's what LEAP is. LEAP means that they are longer dated options. So they have 2 or 3 years of option listed. So not all options have 2 or 3 years of option cycles. So if you're buying, let's say you don't want to buy the stock, you want to buy options deep in the money. So you consider LEAP as good as a option as a stock, because your cost basis is low. So people do buy it. There is always uh, risk involved, because option have an expiry date. So anything with the expiry date, even though you're right in 2 years or 3 years down the road, you're buying, let's say something. Instead of buying Apple shares, you bought LEAP option 3 years from now. So you were right fundamentally and everything. And then when your option comes close to expiry, something happened, and then boom, the stock tanks and your option goes to zero. But people do buy LEAP options, and then they create calendars. They start selling short-term options against it and reduce the cost basis. So you can do that. So only the most popular stock have LEAPs, more than 4 expiration months available. So right now we were talking about 4 months. LEAP have more than 4 months, no more than 3 years out. So they have 3 years. I think that's enough. And I will explain how the 3 months are 3 years listed. usually trade with January month option expiration. So January month option expiration is there. So January month of expiration month is there. Leaves are added in month of May, June, and July. So somehow leaves are added in May, June, or July. If you see the leaves getting added, if you let me know, this is what I read. Leaves are added in May, June, or in July, and they have a January month options, no more than 3 years out. So no more than 3 years out. January option month is listed. In May, they get added in for the month of May, June, or July. So there is a phenomena, the method of listing leap option. So whenever you see January, and you know that this January is not based on the 4 months we discuss, is kind of quite far. So you know this is leap. So for example, option expiration cycle is January. So let's think about Apple. Let's say Apple is assigned to January cycle, and currently we are in the month of May. So May of 2023. Let's say we are in the month of May 2023. Then we know the May is the current month. We know June is the subsequent month. So we know that because it's a January cycle. So first month of the third quarter after July is July. After June is July. So June will be listed there. Then October is listed because it's the first month of the fourth quarter. Then you will see two additional months listed, January of 2024 and January of 2025. So you can, if you're in the month of May, you can, if you're a speculator, you may buy May calls. If you are putting on, let's say you say, no, I don't want to buy May, it's too less time left. So maybe you buy June or July, October, or you can go as far as January of 2024, and you can go all the way to January of 2025. So and buying deep in the money. So you're buying 3-4 strike deep in the money. So when it's that far deep in the money, the option move dollar for dollar. So if Apple goes $1 up, you will see a $1 option move up or down. So you're trading as if you're trading a stock. So this is the way you will see the option listed. Now, what will happen because the May is current month, and what happened when the month of May expires? When, let's say, option expires, May gone, third Friday gone. So when the third Friday of May is gone, then the June, which was the subsequent month, will become the current month, and July will become the subsequent month. July is already listed there. July will become the subsequent month. October will be the first month of quarter, and January 2024 will be listed. It's already there, so nothing is changing here. So if you see here, May, June, July, October, January 2024, and January 2025. So you just have to remember that this is what's listed: May, June, July, October, and then January. So when the month of May uh, comes expiry, then June will become the current month. July is already there, so it will become a subsequent month. October is listed there. So June and July, they are current month and subsequent month, so no changes. We don't need August and September. October will be listed. January will be listed. January is there. This is the way you will see. Then you will see another 1 month added, which is January 2026. So all the way you will say, now I see January 2026. So January 2026 month is added. So after May expiry. Now let's look at the another cycle, which is a March cycle. So we were looking at the January cycle. Now we are looking at the March cycle. So if a stock, let's say Home Depot, and is assigned to March cycle, and current month is May, so we will see May as a current month, and we will see June as a subsequent month. So it's there. And because March is the third month of the quarter, then we will see September and December. So September and December. So we will see these 4 months, and because it's a leap, so we will see January 2024 and January 2025. So these 6 options you will see in the change. But what happened when the when the May expires? So for the March cycle, the May expires. So when the May expires, June will become the current month. Now June become the current month, so there is no July and August listed here. It's July listed here. So July will be added. So July will be added. So June will become the current month. July will be added as a subsequent month. So you will see July getting added. And then September stays there, December stays there, January and 24 and 25 stays there. So you don't see any changes in the long term. So some cycle you will see January is getting added, some you don't see, depend on which cycle it is assigned and where we are in terms of the month. So that's the way the cycles are assigned to different stocks. And knowing that this month will be open next week, especially when the expiry is coming. So right now the option expiry is coming for the month of August. So you will see October getting added for lot of those where there's no October option, you will see October listed because September is the current month and then October will become the subsequent month. So today I explained to you about the option expiration. I explained to you option expiration cycle, and I explained to you why we need to know option expiration cycle so that we can adjust our position, we can adopt different strategy, we know what's coming, we can hedge, we can speculate, all that. Three types of options I explained to you: weekly, monthly, quarterly. Three types of option cycle: January, February, March cycle. I explained to you modified option expiry cycle, which is current month and subsequent month. They added because they initially there was a cycle only. They were assigned to cycle, and then they say, wait a minute, what happened now? We need to add more liquidity, more action in the market, and the traders can hedge. So more action, more speculation, more hedging. Let's go. So they added the current month and the subsequent month. And then I gave you examples of option expiration cycle. I explained to you why Apple, Baba, and Home Depot, January, February, March. And I explained to you what happened for each cycle when the stock is assigned to January cycle, what happened. And it's assigned to February, what happened. When it's assigned to March, what happened. And then at the end, I explained to you the option cycle for leaps. So I explained to you all this. Uh, I will post the recording tomorrow morning. So somebody will in my team will post on YouTube channel called The Real Trade Genie. You can go there, and also you can listen to other recordings there, previous sessions, especially 10 days ago. Next time, I will teach you about the filters. So I'm almost done preparing my content on filters. So I will explain to you what kind of filters traders apply knowingly and unknowingly when they trade. So a lot of filters they are applying unknowingly. They don't even know that they're applying it. So I will explain to you different filters. What are those filters traders use knowingly and unknowingly? So it's very interesting. I will be teaching for the first time. So I will let you know. It may be next week, next Sunday. So please come and attend the topic on filters, how the traders apply filters, different filters. So thank you, and I will see you next week. All right, see you. Thank you. Bye.